Hi, thank you for listening to Reverse Investment Channel. I'm Chi Yao. Today, we will revisit the real estate market for investment or speculation series. The real reason the real estate market can prosper for such a long period of time is because our policies offer the lowest cost of speculation and have made the real estate market the ultimate speculation machine. Imagine if the same terms were to apply to bond market or equity market, what the index would be at right now. Long ago, people spent 1 to 3 years of annual salaries to buy a house versus today 6 to 10 or even more. Many people didn't even need to borrow to buy a house. Today, you can even pay 10-20% or 0 to 1% down to buy a house. The term has extended to 30 years or even 50 years in some countries. Governments offer tax credits, housing subsidies, loan guarantees, and prolonged terms, only to lower the cost of speculation. As the speculation keeps going with worldwide ultra-low interest rate and unprecedented currency printing, more and more people can no longer afford a house. Public programs designed to help people to afford a house only make housing unaffordable. As more and more houses are built for speculation, more and more houses will be vacant. I really can't understand why officials think the housing starts or permits grows faster than not only the households but also the entire population is a positive to the economy, especially with the declining home ownership since 2005. Recent data shows the growing number in rental units. On the official side, this indicates a strong demand for rentals, but on the real side, growing people can't afford a house. All of the above point to more houses are on the hands of fewer people, and more houses are vacant. Even worse, the housing market has been fueled by speculative demand. Majority of them are leveraged with debts. The 2008 subprime mortgage crisis that was supposed to clean up problems in the economy instead was covered up by $1 trillion of quantitative easings and other expansionary policies. The equilibrium is again tilted to the demand side. More houses have since then been built for the forced demand. The size of the total real estate market is now much bigger than before. If our economy couldn't even support the housing market back then, how are we going to support the entire real estate market now? Central banks can't even normalize the interest rate or stop printing fiat without taking the market down. Governments can no longer take any support or incentive away from the real estate market without inducing a financial crisis again. The real economy is weakening. Much of the economic activities are fueled by debts. The official economy needs growing debts to maintain the status quo. But even with the prosperous delusion from non-stop debt accumulation, the reality is people can still feel something is wrong in the system. The real demand for real estate is not as optimistic as the official data hope. Take a close look at the surroundings. Many residential, commercial, and industrial real estates are sitting empty. The buildings are there, but the people are not living or working inside. Speculators are still bidding the price up, taking the difference away, leaving the debt behind. Before the building, the land can be used for any purpose. After the building, the land used to worth something is now useless. The price is up, but the value is down. Seek for real estates with the real demand. Policymakers encourage price speculation and punish value creation. But whatever they do, free market will always bring the reality back. I personally prefer farmland. You can always grow something that worth something. If you are a skilled farmer, you can create value on your property. If you are not, you can lease it to the skilled farmers to collect rents. When policymakers fail to support the speculation, the invisible hand will wipe out the speculative demand, and we are holding something that was something. To wrap it up, when you chase value, the price is following you. When you chase price, you are following the price. Embrace the free market and some money. Thank you for listening to Reverse Investment Channel. This is Chi Yao, signing out for now.